What's up, everybody? Welcome to the Stocks channel. Tomorrow is the PPI data released, and today we're going to talk about how to trade it. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was down 0.16%, and we continue to see that rejection at that all-time high resistance at 517. And as you can tell from the candle body, it is completely inside yesterday's candle body. So this does classify as an inside day, which means we could see a break of this range and finally get a move in this market. Now, PPI data tomorrow morning will be before the market opens, so we are going to cash and waiting until the morning to see what is going on with the market. As I always tell you, there's plenty of time to react if you're in cash, but if you're stuck in a position and the market starts moving in the wrong direction, it's a lot more difficult to be flexible and be unbiased. So going into cash during these big events is a great way to be unbiased, and in the morning we'll look at the chart, and that's exactly what we're going to do in the Discord server before the data drops, and try to see if there's any clues on where this market wants to go after this inside day candle. Now, if not, that's completely fine. We could wait till after the data and then look at the price action. But the first thing you need to understand after an inside candle is whether or not we break the low of this candle or the high of this candle. So going into tomorrow to trade the PPI data, the bears need to break this support at 514. And if they do that, there is very little support below 514 until we get down to 507. 507 is a critical support, so that's likely where the bulls would show up. But a drop from 514 to 507 could still be a very decent shorting opportunity if that support fails. Now for the bulls, they need to break this pesky resistance at 517 and hit that target at 520. And then at 520, there's still the opportunity bears show up. And if bears show up at 520, we would expect a retest of 517. So when you look at this chart, there's clearly a lot more downside risk, because even if you're playing the long side, there's a very slim chance we blast straight through 520 without finding significant resistance. That doesn't mean it can't go higher. There is the possibility we squeeze shorts. If there's too many people caught shorting and we go higher, then we could start pushing into the mid 520s and possibly even hit 525 to 530. But one thing you need to understand, if you're looking at these Bollinger Bands, we are much closer to the top of the Bollinger Band than we are the bottom of the Bollinger Band. And if we break that support at 514, it is going to be a straight line drop to 507. So I do think the bears have a very good opportunity here to start pushing the market lower. And I do think the buyers and the bulls are simply just getting exhausted, because at this point in the market, what trade as a bull are you really chasing at these prices, especially when you're looking at stocks like Microsoft and NVDA? There are obviously much better bargains if you look at stocks like Apple and Tesla, but they're currently in downtrends and going lower. So you really need to assess all of the risk and all of the rewards, and you need to figure out what is the best trade plan from here. And as I always tell you, you really should be prepared for any scenario. Don't assume the market has to go higher or lower. You are a trader, which means you should not care if we go higher or lower. You should simply focus on being on the right side of that move with a good risk reward setup and a proper trade setup that allows you to manage your risk and maximize your reward. So I will admit, if you're trading the indices up here, it is very tricky, but there are plenty of individual stocks that we are doing very well on. And there are some stocks that we are shorting, and there are some stocks that we are still going long on. And that is why I continue to tell you this is a stock picker's market. My focus right now in the Discord server is not necessarily on the indices. It is much more about finding the right stocks to be shorting and the right stocks to be going long on. So going into the PPI data, we still have a bull trend. The price action is still above all of the moving averages, but at some point we need to acknowledge that if price action breaks support, we could be ending this bull trend and starting to roll over. So be very flexible. It is okay to stay bullish while we have this bull trend, but you need to understand bears do take the elevator down. So if we do lose support, you should be expecting it to be a very quick move lower. That quick move lower would be the break of support at 514. So that's where you should be managing a risk from. On the NASDAQ 100 triple Qs, we were down 0.77% today, and the triple Qs are showing you exactly what I'm talking about when I tell you that the buyers look like they're just simply getting exhausted. This is a lot of overlapping price action, which means the bulls are really not pushing out of this range, and the bears are making money just the same as the bulls, because in a range, you could either short the top of the range to make money, or as a bull, you could buy the bottom of the range to make money, and that means both bears and bulls are making money alike. When bears and bulls are making money, that's why I tell you it's a stock picker's market, because it's not just an all bull trend or an all bear trend market. So the indices are chopping around and consolidating, and as I always tell you, when you're in a period of consolidation, you let the price action tell you where you're going to go next. That means while we do have this double top and we do have a lower high rejection, we don't have any confirmation that we've broken down below the bottom of this range until we lose this support at 437. That is the definition of letting the price action do all the talking, because if you're bearish above support, we could simply come back down to support and then just go out for another brand new all-time high. So in order to get bearish in the NASDAQ 100, specifically talking about the triple Qs, we need to break 437, and then we will likely come down here and fill this gap at 425. So the break of support will be the break of that critical zone at 437, and then below 437, I do believe you should be a bear or at least a bull that is retreating to lower levels before you start buying. Again, you don't have to short a bull market. There's always opportunities to just go to cash and buy the dip. But if we do start dipping and it turns into a falling knife, there's no telling how low we're going to go, and we could go through that full-blown correction. Now, likewise for the bulls, if we don't break below support and we start bouncing, then we go for that new all-time high right around 453. And there's nothing that says we cannot do that. Even with an exhausted bull trend, we could continue to push higher. But again, as a bull, what stocks are you really looking to buy up here to push the indices higher to new all-time highs? So just consider all of the risk and rewards and manage your own risk accordingly. You know the critical levels, and as long as you're managing risk, even if you lose, you shouldn't be losing too much money. All right, next I want to look at the Dow Jones, because the Dow Jones is trying to break a critical resistance. We've obviously broken above the resistance trend line for 2 days in a row, and we're getting very close to starting to close above this daily high just above 391, which should start telling us the Dow Jones is trying to go to 400. Now, if the Dow Jones is going to 400, is it likely that SPY and the triple Qs go much lower? Likely not, because they do share a lot of the same components, and the parts of the whole going higher in the Dow will likely stop SPY and the triple Qs from going much lower. So watch the Dow closely here. Usually I don't use the Dow as a leading indicator, but breaking above 391 is very hard to ignore if we do believe it's going to 400. Now, if we can't hold above 391 tomorrow and we start to gap down and start breaking through all of this support right around 388 and down here right around 385, then obviously this is just a false breakout move, and we're still likely going lower towards 382 to 377. So watch that level at 391 very closely, because in the Dow, whether or not we're above or below 391 should be very critical. And then over on the Russell 2000 IWM ETF, we still have the bull trend. Price action did close back above all the moving averages. So as long as we're above 203, this bull trend is intact, which means it could still go towards 214. Now, if we break below 203, I would get risk off, because below 203, we have a gap to fill below 202 and a support down here at 196 all the way up to about 199. So there is a lot of support levels, but below 203, that means the bulls were not strong. And if the bulls are not strong, there could be a lot more downside coming. So in the small caps, manage your risk right around 203. And if we break 203, look for lower support levels. If we start bouncing and we break resistance at 207, then we should be well on our way higher towards 214. And then finally, to prepare you for trading PPI data, we need to look at the VIX, because the one thing about the VIX's behavior is that it has consecutively been making higher lows all the way back to the end of 2023. We have never seen the VIX actually make a lower low yet, even though it continues to chop around in this range. If you've noticed, the range lows continue to get higher. And I do believe if you've been trading long enough, you should identify this as a market that is getting more and more uneasy. And every time we continue to make a new high in this market, we are seeing just a little bit more fear than the previous high, which is telling us we could be getting very close to a top. So focus on this, because two things can happen. We are either going to see fear leaving the market and the VIX is going to plunge down to the bottom of the range and finally break this trend. Or what's more likely going to happen, eventually this fear is going to take over the market and we are going to see a huge spike in fear and the VIX is going to start going higher towards 20. I do think with looking at the VIX, it is more likely these higher lows are going to lead to some panic selling. And we do have the end of the quarter coming up and quad witching, so there could be plenty of volatility around those as well. There's always going to be rebalancing around quad witching and around the end of the quarter, and simple rebalancing could lead to a lot of selling pressure in some of the market leading names like NVDA, and just a simple rebalancing could scare the hell out of the market participants and we could see some volatility. So again, not saying it's going to happen, but it's definitely something you should have on your radar, and it's definitely something I would be watching for on PPI data and on quad witching. Because if the VIX starts to spike, there is a good chance we're going to get high volume selling and break those support levels that I just talked about in the indices. So focus on that, and the VIX breaking above 15, if it breaks from a higher low, should be a concern and you should take it seriously. So jumping back over to the S&P 500, tomorrow should be a very fun day trading day. I'm looking forward to it, and I know we're going to find a lot of great trades in the Discord server, but all that I want you to understand is that this is still a stock picker's market, which means you can be a bear or a bull, and you can do really well in this market as long as you're identifying the correct trades on the correct stocks. If you're trading the indices, it's probably very frustrating right now because they're just chopping around and really not going much of anywhere, and that is why we're more heavily focused on the individual stock names right now, because those are very volatile and there's lots of great trades going on in those. So if you want to come trade with us and learn how to trade price action, you could join the Stocks Channel Discord server, and you'll also get access to all of my intraday updates and technical analysis. You can find out how to join the Stocks Channel Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.